Yo, what up, Hyperchange? Welcome to another episode. I wanted to go live to talk about Tesla earnings, hot off the press. The conference call's coming up. Honestly, I wasn't planning on making this. I normally like, but the results are very interesting because now the recession's hit. We've seen how this is playing out. Tesla's lowered the prices on its vehicles significantly in the past few months, but we haven't had a chance to see how that's actually flowing through to the financial statements. And so now, for the first time, we got to look at that. And I just thought it was super interesting. Like I'm trying to document my journey on my YouTube channel of investing in Tesla, and I think this is a really interesting and pivotal quarter. So right here, I'm looking at Tesla's operating income. This is on mainstreetdata.com, which is kind of like Hypercharts. It's a new website. Really cool. But so this is the most interesting thing that I noticed about this quarter. Tesla's gross profit, 4.5 billion, very weak. If you look at Q1 last year, 5.5 billion down to 4.5 billion in Q1 of this year. So the first year-over-year decline in gross profit that I can remember in a while, besides even this quarter, that was a huge hit. Actually had growth as well, but that was when China shut down last year. So very interesting to note that the price hits are having a very real impact on Tesla's profitability. If you look at operating income, you can see 2.7 billion, much lower than the Q1 2022 and the lowest in a while. So why is this so important, and why was I focused on the gross profit and really just the profitability of Tesla going forward? Because all of their valuation right now is stemming on Tesla being like this massive growth company. If you're thinking about, okay, we're going to do 5 billion in earnings a quarter, that's 20 billion in earnings. That justifies a $500 billion valuation at a 25 times price EBIT ratio or earnings ratio. Now that 20 billion in earnings that we were at and seemingly to grow from is now looking like 20 billion in earnings is going to be really hard to hit this year, and it's going to be we're lower than 20 billion and we're not growing. So 2.6 billion times 4, that's like 10 or 11 billion earnings run rate. And you got to think we've had more price declines into Q2. All of those price declines didn't really happen until like they happened throughout Q1, so you didn't see the full effect in Q1. So we're going to have to see on the conference call what they say about the margins. It's going to be super interesting. But my first take on this is they can say all they want on the conference call, but if you go to here, I'm going to take y'all here now to the Tesla shareholder letter. This number right here, the GAAP operating margin, 19.3%. As you can see, that's the lowest we've had in 4 quarters by far, 10% lower than Q1 last year, 4% or almost 4.5% lower than the quarter last year. And this could get even lower next quarter, potentially. We'll see what they say. But and then that flows through to the operating margin. So out of every dollar in revenue Tesla was generating, used to be 16 cents in profit. Now it's just 11 cents in profit. So a huge hit to profitability despite a minor decrease in prices. And that goes back to kind of the flip side of Tesla's model. We talk about all this incremental margin. Every incremental, $1,000 for FSD goes right to the bottom line. Well, every $1,000 price hike, they only make $5 or $10, $15,000 on a car. So that $1,000 or $2,000 decrease in price, $3,000 has a real big percentage impact on margin, and that flows through powerfully to the income statement. So we're all watching this economic case study unfold in real time, but I think it's interesting and really fascinating to know how Tesla is very real. Like, my take is like, okay, they'll shrug off, the price cuts, earnings may be flat for a little bit, but they'll get through it. And now I'm actually thinking like, wait, earnings might, be flat and actually start to decline. So I think if we take a look and zoom out more annually, let me pull y'all up the annual chart here of Tesla's operating income. So operating income last year of 12.6 billion, 2.6 billion in Q1 puts us at a lower run rate than this. So I think we still have a great chance of beating the 12 or 13 billion, but is this going to grow to 20 billion? I'm not sure. So that's where it gets trickier to justify a trillion and a half market cap if the earnings growth just isn't there. But on the flip side, I do want to show you something really cool, which has to do with the energy business, because as much as the overall financials were hit because the car business is declining prices, energy business is going through some incredible growth here. So just bear with me 1 second where I pull this up. But energy business, which had a record quarter last year of 1.3 billion in revenue, soaring to 1.5 billion in revenue. So this was a record quarter for energy, up huge from Q1 last year, 660 million to 1.5 billion. This is all about Megapack growth. So this is that battery deploys hit 3.9 thousand. I think that means gigawatt hours. So huge growth in that Megapack business. And if you remember, they just opened up a brand new Megapack factory in Shanghai. So, am I frozen? Uh-oh, that's not good. Oh no, I'm frozen. 1 second. Yeah. But so Tesla opens up a new Megapack factory in Shanghai, so that should accelerate that growth. I'm sorry, my camera just cut out, but I don't know. Anyway, I just wanted to hop on this live. I already kind of said what I wanted to say, but Tesla, the price cuts have had a very real impact on the earnings. This is just my analysis of Tesla as a shareholder. Like, I'm like, damn, the price cuts are having a real impact. If they continue cutting prices, if the economy gets worse, then we have to assume earnings are going to get hit. Am I selling any of my stock? Does this change my long-term vision of Tesla? Not at all. But it is interesting to note that despite deliveries growing 30-something%, revenue growing 20-something%, we're seeing EBITDA shrink, gross profit shrink. And if these price cuts play out, that's going to continue to happen. So very important to note when you have a growth stock that's, I would say, priced at a high multiple, expecting that growth, when all of a sudden that earnings growth doesn't materialize, then that's when you can run into trouble. And so the other thing is Shanghai is like not ramping. Yeah. Anyway, so I'm going to let y'all go. I'm going to get on the conference call because I think we have a lot of clarity to get on the conference call, more about these results. But my first take is Tesla's Q1 earnings are looking a little soft. It's taken a while for the recession to hit them, but it's hitting them. And if you want to think about what this is going to do to Rivian, to Lucid, I mean, Tesla's the most profitable, strongest company in this space. So this spells really bad things for Lucid and Rivian. Tesla has plenty of cash to get through this. They're going to be fine long term, but it is interesting to note that during this recession, earnings could go down or flatline for a little, impacting that such strong growth story. Anyway, see y'all soon. Make sure to tune in the earnings call because this is going to be a really interesting earnings call. A lot of Tesla quarters, I'll say it's like, they're just reporting a profit. It's record numbers. Everything's great. Now when things are going bad, if you're a bullish investor, this is the time to really sink in and be like, okay, what's going wrong? Why is this happening? What's impacting earnings? How does this change my long-term thesis? Like, this is a really important time to think through all that. Fascinating to see this data, case study in real time. We're having fun. Yeah, peace out. Good to see everyone.